Let's discuss markets further and bring in Lizanne Saunders, Chief Market Strategist at Charles Schwab. Lizanne, great to see you. Thanks so much for joining us. My first question was just going to be whether the tone from clients over the summer months has changed at all, whether you're sensing more bearishness or whether everyone's still fairly constructive.
I would say there's a tone of cautiousness, but that's not really something terribly new. What we have found really for much of this year is that the concerns expressed are much more of the macro variety, certainly recently inflation concerns, but debt and deficit concerns. A little bit more recently about we've gone so long without a corrective phase, what could be the catalyst for that? But generally, these are these macro level concerns that seem to be top of mind for our clients.
What are you telling them in terms of where they should be positioned? Is it still in the growthy names, or is it much more go for safety and security at this stage?
Not really either. We've been more factor focused in either style bucket or even to some degree sector focused. And what's really coming into focus is that quality-based factors have moved into the leadership position, not just on the value side of the equation, but on the growth side of the equation. So strong balance sheet, strong free cash flow yield, actual realized earnings growth versus just prospective earnings growth. So it's almost a hybrid factor-based approach that in particular, I think active investors that are stock pickers want to take as opposed to making kind of unilateral sector-based decisions or thinking of growth and value in index terms. I think there are much more important nuances that need to be discussed, especially as it relates to things like growth and value. Momentum has also been working, but I think when people hear momentum, which is a factor, it's not a predefined list of the type of stocks we're talking about. I think people think high beta and tech type names. Momentum just means that what has been working is continuing to work. And more recently, that's been a bit more in the classic defensives and either as well in a sector like healthcare.
So what does all that tell you, Lizanne, about the environment that we're in for growth, for what the Fed's going to do, and ultimately where that takes the market?
I think the underlying action within the broad indexes tells you a lot more about what's going on than if you just look at the kind of headline close, new highs, the rotation we've seen under the surface, whether it's at the sector level or at the factor level, this shift toward quality, leadership now residing a bit more in those traditional defensive areas, I think points to a slowing growth environment. And I think the retreat in areas that are very cyclically tied to inflation and the commodity cycle are telling you that even though we're not out of the woods yet in terms of the supply constraint component of inflation, that some of that commodity-based push on the upside is starting to wane. And you're seeing that reflected in recent weaker performance by energy and materials. So I think to get a sense of what the market is telling us about the economy needs to go much deeper down than just looking at the closing price of the index and where it sits relative to highs.